Morning, Steve Freed in Chicago with the morning grain comments. Well, it's election day here in the United States. It's interesting that some people are looking for a little bit of a post-election bounce in prices because soon all these negative advertisements will be over. The interesting thing is that some economists feel that no matter who is elected, they will have a problem with a divided Congress, and that could push the U.S. economy over the fiscal edge that everyone's concerned about and eventually be negative to commodities and stock prices. So we'll just see how everything plans out, and then we'll see how the markets react to that. We've also had a bounce in the grains overnight. Beans up about 10, wheat up 6, and corn's up about 3 cents. Each of the commodities have their own individual fundamentals that they're following. Beans have dropped pretty dramatically on expectations that the USDA will raise the bean crop on Friday, and also that we're turning into a more favorable weather pattern in South America. Both issues could be bearish beans even from these prices. The bean market, though, is also seeing nearby strong demand and a lack of farmers selling as harvests here in the United States has completed, and we're seeing a very strong basis. In fact, for the month of November, some locations are recording record high basis levels. That could offer some support at least to the nearby market. In corn, the main thing is that we're not seeing the export demand, and we have a very large December contract open interest that we have to get rid of. That could still offer resistance to the corn market. Just like the beans, harvest is done, cash basis levels are firming up, and eventually that could be supportive to corn prices. In the wheat, low crop ratings in the southern plains, no forecast of rain is helping the wheat market. Globally, some of the competitive stocks for exports are declining, and actually U.S. soft red winter wheat prices are competitive to the market for export, and that could support wheat prices, especially in Kansas City. Looking out down the road, we're still going to have to figure out what the economies are going to do. And already 2013 and 2014 U.S. supply and demands with higher acres, trend yields are looking negative, and that could keep a lid on prices, especially new crop, until we get into the fall season. The weatherman is expecting a normal U.S. winter. He's expecting a wet spring in the east, and then maybe a little bit drier summer in the western Midwest. All those things could be negative to start out with, and then we'll see what happens afterwards. So again, go out and vote, and make sure you make your vote count. And as always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
Does the Fed become an issue in the campaign, particularly if they act?